All right, so we got a small crowd today, so I expect everyone to participate. You can hit that mic button on the left-hand bottom left if you have a question. We're going to be happy to make this one interactive and get into the weeds. So last night I was on a pretty big spaces hosted by this larger company, and it was great because we were talking about exactly this topic. So we wanted to kind of do it with our own community here. It's about market sentiment, and January effect kind of came into it. But really, the reason I wanted to bring up this topic, this is part of our series of Discover the Story, which we do every Wednesday, where we talk story trading philosophy. And as you know, the whole premise behind story trading is that there's a reason for everything. There's a reason why stocks go up and down. It's not random. It's rational. We've called it efficient, which some people don't like, but whatever definition you take, my personal position and the story trading position is that markets do what they do for a reason. Stocks go up and down for a reason. If you don't know why, it's not because everyone else is stupid. If you don't know why, it's not because the market's inefficient. If you don't know why, it's because you haven't done enough research yet. So that's the whole premise behind story trading, and it's very relevant to what's happening now in December and January, what's been happening with the sell-off in growth stocks and the opportunities with the January effect. It all comes about from this understanding of rational markets. So, let's take a step back and talk about, what's been happening with growth stocks. And the catalyst, very obviously, to me, was the prospects of interest rates going up served as a catalyst to kind of pop that growth stock fundamental overvaluation bubble, right? As you know, I don't really believe that market prices are ever overvalued or undervalued. They're priced right where they need to be. Again, based on that market efficiency theory, we look at four pillars, though. We look at fundamental, sentiment, catalysts, and technicals. And growth stocks are stocks which fundamental investors on usually completely miss because they're always pretty much fundamentally overvalued. And then you can have an event or catalyst such as, hey, interest rates are going to go higher, or we think they're going to go higher in 2022. So time to do a growth stock sell-off. And why does that happen? That happens because these growth stock companies are not profitable yet. They need to access capital markets, which means the cost of capital is going to be higher for them. It'll be more difficult for them to get it, and that can add increased risk to the success of growth companies long term. So that's how this all kind of started in late November, early December, led by ARKK. ARKK is the ticker symbol. That's Kathy Wood's ETF from ARK Invest. And another thing that I've noticed before we get into the January effect is that ARKK has become an excellent proxy. In fact, you know what? Let me just tweet this out right now. Oops, what happened here? I'm going to tweet this out, or maybe Jared. No, you can do it too if you want, Jared. But I'm going to tag ARKK on this over here because I want to get. This is a big, exciting topic. Talking ARKK right now. Anyway, ARKK, I've noticed, has become an awesome proxy to gauge sentiment, or not necessarily sentiment, to gauge price action in all quote-unquote risk assets. So ARKK investor portfolio is usually in growth companies. Tesla, for example, is one of their biggest holdings. Teladoc, another one of their bigger holdings. I believe Zoom is as well. So they invest in these large market cap, high growth companies that a lot of people view as quote unquote overvalued fundamentally. But what I've noticed is the chart for ARKK trades in lockstep with everything that I call a quote unquote risk asset. So that risk asset could be biotech companies that are pre-revenue, micro cap companies, any company that's not profitable yet, speculative companies, meme trades, sentiment fueled like trades that don't have any fundamentals behind it. All of those stocks, I would say a vast majority of them, pull them up, do a comparison with ARKK, and you'll see how closely they're aligned. And that's because for whatever reason, the market is, well, it's not whatever reason, it's because interest rates are going. Interest rates are going. There's a reason behind everything, right? People think interest rates are going to go up. That's bad for not profitable companies. And that's why there's also likely algorithms that are hooked up with the funds connecting ARKK to selling other stocks, such as SMSI, right? And many others. So that's what's going on. That's a dynamic behind the sell-off. Now, that's exacerbated by what we usually see in December, which is tax loss selling. So we've had 2 events already on this for our VIP members, where we go through the logic of tax loss selling and we come up with stock ideas to take advantage of that. Now, tax loss selling is where people are trying to offset their gains to pay more taxes. So come late November into December, they're saying, hey, I'm making, let's say, give you an example, I'm making $20,000 on air, and that means I'm going to have to pay an extra $6,000 in taxes, but I'm losing $10,000 on this other stock. If I sell that other stock, I'll only have a $10,000 gain and I'll have to pay $3,000 in taxes. And that's the calculation people are doing. And that causes stocks that performed poorly in 2021 to go on a quote unquote artificially enhanced, right, deeper sell-off, right? Some people may call this inefficiency, but I think it's efficient because people are doing what they want to do and they have a rational reason to do it. They have a financial benefit to sell these companies off that can cause prices to be, fundamentally cheaper, can cause companies to become fundamentally undervalued. And that's part 1 of the January effect, is to let's identify companies that may be getting oversold to better fundamental values in December. And then why do you get the January effect? Because these stocks were artificially sold off, right? For reasons other than to do with the company. So come January 2nd, you can now see demand overwhelming supply as people get back in the stock, especially those people that sold the stock back in late November. They had the foresight to do that. Those same people, because you have to wait 30 days to take the tax loss benefit. You can't sell a stock now, say, I made less money, I pay less taxes, let me buy it back January 2nd. No, you have to, it's a wash rule sale, the wash sale rule, 30 days. So people sell, especially the larger holders, the more savvy holders, they'll sell late November and they'll buy back the stock starting January 2nd. So that's the start of your January effect, is you start seeing a rebound in the stocks that were most sold off in December. You have to be careful, though, to identify stocks that have become fundamentally overvalued because of the sell-off. If there's some intrinsic issue with the company anyway, right, it may just keep going down forever, right, and go bankrupt, right? So you have to be selective and find which are the companies that have become fundamentally undervalued because artificial selling in December. Now, that's just the beginning of the January effect. There's 2 other things that come into play in January from our 4 pillars, and that's sentiment and catalysts. So why sentiment and catalysts? So first, let me talk about sentiment. Sentiment, it's a brand new year, all right? People are optimistic in a brand new year, especially with a stock that maybe had done poorly in 2021. They're thinking, let's turn a new leaf. This will be the year my company will do great, right? So you get a psychological boost and a sentiment boost in stocks to say, let's give them another chance in 2022. That'll increase the buying pressure on certain stocks. That's part of the January effect as well. That's sentiment. The other item you have is catalyst, and we actually just saw this. Well, I can't get too much into it because it was a VIP event on a particular stock, but let me talk about DRIO, DRIO. That's my own VIP pick. And what I know about DRIO is they have lots of partnerships launching in January, right? So, and this is very common. A lot of relationships, especially business to business companies that sell to other businesses, they will either sign deals beginning of January, or the relationships will more common. the relationships will kick off beginning of January based on executed deals in 2021. So now you have the catalyst of these deals kicking off, and very often companies will issue press releases to go along with these product launches or deal launches, whatever they may be. And, in the case of DRIO Holdings, DRIO, I do expect, I wouldn't be surprised if they're actually going around doing a marketing push in January. I know they're going to be at JP Morgan in mid-January, JP Morgan Health Conference. I've actually reached out to DRIO management and I say, hey, look, this is a great opportunity. You have lots and lots of partnerships launching in Q1. Why don't you consider doing a press release early January, getting the word out? And they said, good idea. We'll consider it. And obviously, I don't know if they will or they won't. That's up to them, but I gave them the suggestion. So, but that's very common, whether I said it or not. There's lots and lots of companies that will be issuing press releases here in early January. So now you have the catalyst and the sentiment, which are going to be tailwinds for these beaten down stocks that were beaten down both technically and became fundamentally undervalued in December. And what do you get? You get a perfect storm. If you really wanted to become an expert in the January trade, you could just trade for, 2 months a year from like beginning of December to end of January and then call it quits. You'll outperform everybody, go home for the rest of the year. We had, I don't have it pulled up in front of me right now, but we had our picks, our January effect picks from last year. And man, these picks, they were all up like 20, 30, 40, 50% across the board. These were picks from our community in January. And then we compared it to if you held it for the entire year, all but one of them gave back all their gains for the rest of the year, right? So this is a very powerful and also very well-known thing. Now, just because it's a very well-known, powerful thing doesn't mean it always happens. There's always exceptions. The market can be crazy. There could be macroeconomic things that throws everything on its head, right? So there's always risk. So you have to be diversified. I'm only allocating like 5 to 10% of my portfolio, maybe even less, honestly, to January effect plays. So that's something to be wary of. So before we get into like January effect picks, I also want to talk about the market in general. So we're seeing the ARKK sell-off, right? The growth stock sell-off that's being exacerbated by the December selling. But there's a couple other things I'm a little bit worried about. One of them is the sell-off in ARKK over yet? Or more specifically, the sell-off we're seeing this week, as trying to retest the lows of a couple weeks ago, is that really because of tax law selling? Or is that a continuation of the bubble being burst because interest rates are coming up? And, I bring up if you pull up an ARKK chart and pull up a weekly candles on that, the 200 weekly moving average is still another 23% below this level. And if you look at a stock like Tesla, which we know is quote unquote fundamentally overvalued, right? That could always correct and cause ARKK to go lower and down another 20-23% potentially in January as a continuation of this risk off trade due to interest rates going up. And then what will that do to our January effect picks? Because we know a lot of these are trading in lockstep with ARKK. So this is where you have to be careful. You have to be diversified. You got to watch your allocations, and you got to be a stock picker. Like I said, you can't blindly buy any stock that's been crashing in December. You got to be selective and choose the ones with good fundamentals that are becoming fundamentally undervalued. That's not going to guarantee that you're going to win in January, but it will increase the odds that you're going to win in January. So that's one thing I'm looking at, Jared. I got one more, but let me take a pause there. There's a lot of information I threw out there. Jared, if you want to give your feedback, and if anyone else has any questions or comments, you can hit the mic button and we'll talk about that further.
Yeah, I think that you're right that you just can't expect that everything is going to go up. I think it's important to try to be a bit diversified and not go all in on any one of these plays, because when we looked at it last time, most of them did do well. but like a significant minority, maybe like 25% of them didn't. So like if you are just going all in on one of these, it's possible that you'll get like one of those 25% and it will just keep going down. So don't get too concentrated into any one of these suggestions.
Yeah, that's absolutely right. But I will defend their track record a little bit better. Uh, um, you're absolutely right in everything you said, except I don't think it was 25%. I'm looking at it right now. We had, man, it was really good. There were only 2 picks out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 2 picks out of 12 that
Okay.
were red in January. 10 out of 12. And of the 10 that were green, it looks like the average gain was around 25%. So yeah, we did pretty good last year.
Oh, that is yeah, that is better than my guess. So yeah, great job, story trading community.
But it doesn't matter because you're still right. You shouldn't over concentrate. You got to diversify. So that's that. Other thing I wanted to add is what the heck is going on with SPY and QQQ and Apple and Tesla and all these companies, like, I don't know about Tesla, but Apple and Microsoft and Facebook constantly hitting new highs. I think Apple's heading to $3 trillion, while at the same exact time, it's like you have 2 stock markets. Like, those seem to be the only stocks that are going up, and everything else is like down 50% in December. So, there's lots of explanations for that. One of them potentially is, hey, because there is inflation, that's what's causing the interest rates to go up. You know, I'm going to be better protected long term in an inflationary environment if I'm in these mega cap companies. They're going to be able to withstand the higher costs better. Their products are more, people depend on them. They're not going to cut off, Apple phone or whatever it is during an inflationary environment. And at the end of the day, I'll be holding an asset which is going to be worth more as the dollar gets weaker over time. So that's one of the reasons why money keeps getting pumped into like the 5 largest companies in the world, and everything else is getting pummeled, right? But I worry about the possibility of another dynamic. And what I'm going to throw out there is not proven. It's just my own kind of thesis that may or may not be right, but it's something to watch for. Is just like you have the tax loss selling in December, is it possible that some people are holding back on selling their profitable companies in December, even though they may be getting overvalued because they don't want to pay the tax this year? So let's say you're up 20 grand on Apple or something, and you're like, Apple's not worth $3 trillion. This is getting ridiculous, right? I would probably sell Apple here at a $3 trillion valuation, you say to yourself. But if I just hold off till Monday of next week, I won't have to pay that tax bill until April 2023, another 15, 16 months from now instead of 4 months from now, right? So I wonder if that's a calculation that's being made. Now, if you're a big fund, I think you're probably paying your taxes quarterly. But individuals, for the most part, are paying them annually, so they're going to get deferred by that 15-month period. I'm not sure if this can happen or not, or this is a dynamic that may happen in January, but I'm thinking it may be something to watch for. I don't know, Jared, if you have any thoughts on that.
Yeah, I definitely think that's a possibility, although I wouldn't necessarily use Apple as the example. I mean, Apple is
Right.
just, it's so heavily owned by institutions. I don't think that
That's
retailers
true.
are going to make that much of an impact. But it's certainly possible that that might be more likely to hit a stock like a Air or something, right?
Oh, good point. Mm-hmm.
So that's one that's more propelled on retail sentiment, and although it's still off a little bit from its height, I think a huge number of people got in at your recommendation and are sitting on a big pile of profits right now.
Yeah, well, I don't give myself that much credit. I think the stock would have gone up with or without my recommendation. But I think that you're right about like Air versus Apple. And, it's interesting with Air because they have a catalyst next week. So this is going to be like tricky. Yet next Thursday is the earnings report. And recently, hey, I got back into Air at 16 after selling at 25. Now, I was doing a little trading here and there anyway between, you know, different prices. But in terms of my core position and my public kind of, public positions on it that I've been voicing, I got out at 25. I warned people to get out around 25, and I didn't give the green signal until like 7 days ago at $16, because I saw a strong technical signal followed by a news catalyst that I was waiting for. And I went in that morning at $16, and it's been a straight beeline up to now $23. So what you had a technical situation that was finding support and breaking resistance at the same time there. Then you had the catalyst come out. So it was a event reaction to a catalyst. That was the Silicon Photonics order that came through. And then now you have what's typically known as it's an event anticipation. I call them earnings anticipation run, right? It's a little bit tricky because, hey, this thing already ran from 16 to 23 on an event reaction. So what, is it going to run more from 23 to something higher next Thursday on an earnings anticipation with what you just said, Jared, with Monday being, hey, let me sell some air to defer taxes for another year? Like, you have all these dynamics. I don't know, but I will tell you, the RSI is still relatively low at 67. You know, and when you look at RSIs, you really have to look at the relative number. 67, some people say, oh, that's high, you're doing the 30-70 rule. RSI is not as clear as 30-70. It has a line chart, and it has support and resistance, just like a price chart. It works, I'm telling you, right? So historically here in the past 6 months, air RSI has been kind of, for the most part, when it was going on its bull runs, was between 77 and 91. So right now we're at 67, which implies there's another more upside. This RSI can go up another, the 70s and 80s. That could happen. You get and then Rex is screaming in my ear, and Rexman, and on Twitter and social media has been very vocal that if this thing breaks 22, it's going to keep on going. It broke 22. Now it's 23.50, and after hours, the bid's 23.48. And he's saying the next resistance is 24, which he doesn't think is a huge resistance. The key for him is 22. And if it breaks 24, he thinks the 30s are coming pretty quick. So how do you square that, right? So I don't know what's going to happen next week. It could be very volatile, and I think what you just said, Jared, is a big part of that. I could imagine a lot of people selling Monday to defer their taxes. But then Rex has a pretty good track record, 30. So let me throw an idea, a thesis out there for you of how this might play out next week. This is a quarter where the stock ran up because of press releases of contract wins. But those contract wins did not hit an earnings report yet with, a big revenue and earnings number. So that's probably going to happen this quarter. Now, I'm not the fundamental expert. I don't have my spreadsheets. I can't tell you exactly what people are expecting with revenue and earnings, but I can tell you this, that when that number hits and it comes out on the wires and it's like the revenue is up like whatever, 200-300%, whatever it's going to be, and their earnings are up like 80%, like some crazy numbers are going to be printed, right? That can bring in a lot of immediate buying. But then what happens is that these are expected. Why did the stock go from 270 to 25? Because people were already expecting this. So while you may get like a little bit of buying right after this that takes it to like 30 plus, and then you'll get like a big sell-off. This is a very common dynamic I've seen. Maybe that's how Rex is right, and maybe that's how you're right, Jared. Maybe this thing sells off on Monday and it's going to be very volatile, and it doesn't break 24, it doesn't get to 30, right? But then you have a little bit of an earnings run up again after the sell-off Monday or Tuesday. You get another run up Wednesday and Thursday into the earnings report Thursday afternoon. And maybe after the report, it tags the 30s, Rex's target, and it comes back down. There's a lot of possibilities here. What I'm really doing with air test systems is selling premium as much as I can. I've made a lot of money selling puts, selling covered calls now. That's another topic for a whole nother time. It's one of my favorite things to do is to sell options on air. But I wanted to go somewhere else. How did I get on air? What were we talking about?
Well,
I don't think
I
that
had
was
brought
even
it up as a potential candidate for stocks that may go down for profit taking following the new year.
And anytime you bring air up, I got to keep talking. So that's what happened. All right, cool. So, going back now, let's talk some specifics. We talked about by the way, if you have any questions or comments, you can hit that mic button. But now that we covered now that we covered the philosophy behind and the rationale behind why the markets are doing what they're doing here in December and January, let's talk a little bit about specific January trade ideas. The first one was actually my first January trade investment was SEAC. Man, did I get lucky, although, maybe it's not all attributed to luck, but SEAC was a stock. I've known about this company for 2 or 3 years. I know there are people who like their products and services. It's some sort of like an ad technology company for advertisements and especially streaming video ads and analytics and intelligence that goes into that, right? So I've had people kind of screaming in my ear for the last couple of months, hey, this stock is so undervalued. And I kept holding off because chart was terrible and I kept on going down. And then you were entering tax loss selling season, so I kept on avoiding it. But I had in mind that people who do their research and they like the fundamentals, so I had this as like a top idea. Then someone else in a room also chose it as a January effect pick, someone by the name of Matt S. I'm not even sure who he is, on December 5th show. So I was watching it, looking for an entry. Now, the reason it was one of the first January effect pick that I invested in was because they also had a catalyst mid-December. So January effect had a lot to do with catalysts in January. This had a catalyst mid-December, which is earnings. So I'm like, if I'm going to play this, I got to get in early December. So that was a calculation there. I got in at 70 cents in a pretty big way. And it marked the bottom of the stock. I mean, it went briefly to like 67 cents after I bought. And then we just got a great surprise. They bought, or they have a LOI to merge with Triller, which is a competitor to TikTok. And the rest is history. Man, when the news came out, the stock kind of halted. I didn't know what was going on. I thought it was like a fat finger error. I thought it was someone getting excited because it's the day before the earnings release. The day before the earnings release, the thing goes from like 70 cents to like $1.05 in like 5 seconds. And I sold my entire position at $1.05 because I'm like, that's just a market order. Someone trying to get in for earnings tomorrow. I'll buy it back, for like 80 cents in 20 minutes or something. That's what I thought. So I was out my entire position, and then I saw the news while it was halted that they're going to be, that there's a rumor that they're going to merge with Triller, and I'm like, well, that's great. Let me get back in. So I got back in when it started trading again at like $1.35. All in all, the deal came true. By the way, the next day earnings were great, and because the fundamentals were great, I made a much, much bigger investment in the 130s to 150s because he had the upside of a Triller acquisition, which would potentially take the stock to $3 or more, was a calculation I had made with some of my colleagues. And if the deal didn't happen, the stock was really worth $1.30 to $1.50, right? And that was getting lost because no one saw the earnings release. Like, no one cared. Everything was about the acquisition. So everyone assumed that this was an 80-cent stock or a 70-cent stock if no acquisition, and a $3 stock if there was an acquisition. So the thing was trading at $1.50, which is where it should have traded anyway if people were paying for the earnings report. So it was like a free upside optionality on the deal actually closing. So actually, like, even though I got out at 105, I bought back much more between 135 and 150. Anyway, the deal happened. I ended up selling most of my stake at $3. I made a ton of money in like 10 days. It was incredible. And now the reason I'm talking about it so much is because there's still an opportunity here. So the deal terms on this, and again, what does this even have to do with the January effect? It has to do with the fact that you get these artificial opportunities because of tax loss selling, right? This has a lot to do with it. So And because of that, what else did I say? You get stocks that are fundamentally undervalued that create these upside opportunities, right? Why was there an opportunity for SEAC to monetize like they did and say, hey, we can triple our market cap by doing a deal with Triller? Why would they be able to do that? Because the stock was so fundamentally undervalued, right? So again, it's not all, coincidence. It's not all luck. But now there's still an opportunity. I got out of my entire position at like $3, between 270 and 310, and it pulled all the way back to a low of $1.51. It's trading in the 170 range right now. Let me see. SEAC 164 is the close, right? But here's the thing: the deal terms say you can either get 2.3% of the combined new company with Triller at an assumed valuation of $5 billion, which would roughly be $2.35, right? Now the stock's $1.64. But that's not so meaningful. Why? Because that's an assumed valuation. That valuation is actually determined by the market, right? So the way the calculation was done in terms of number of shares everyone gets and how they divide it up internally between Triller and the SEAC was based on this $5 billion number. It makes a difference in how they do the calculations. So they had their internal calculation of $5 billion, but once it goes on the market, the rest of the market will say, dude, Triller is way overvalued. I think it's, I don't know, 300, 400, 500 million in revenue a year, I think I read somewhere. So it's like 10 times revenue, whatever it is. And, we think it's only worth 2.5 billion. So let's sell the stock off, right? So that's part of one of the dynamics where you have to be careful, and you can't say, hey, this is worth 235. But there's a part two to the deal. The part two to the deal is that you don't have to get 2.3% of the combined company. You have an option to get your share of $25 million cash plus $75 million in notes, right? So think of it as, $100 million valuation in some sort of, fixed asset price, right? That comes to about $2.05 a share. So the stock's $1.64. It was $1.51. So I got back into the stock because there's upside here from almost guaranteed upside from $1.64 right now to about $2 in an environment where there's so much volatility. I'm taking that 30% return or whatever that is. But one of the ways I'm doing this to reduce my risk and increase my upside even more is selling puts. I'm selling $2 puts at like 50 cents, which gets me into the stock at $1.50. Even though the stock's 164, I can get in a bigger discount, get in $1.50, $2 minus 150, 50 cents, 50 divided by 150, 33%. I can get a 33% return by selling the $2 puts on SEAC. I'm actually putting a lot of money into this trade. Now, one could say there's still risk there, right? There's always something called deal risk, right? Why is the stock at 164 not 2? Because it's going to take time. There's a time value of that deal closing because it could take a few months to close, right? But there's also the risk of a deal falling apart, which does happen. So people are like, hey, if the deal falls apart, but I still think that people are forgetting about the earnings release, which was a huge beat on revenue and earnings and a lot of catalysts for them this year on the advertising side. Because I still think the downside in a scenario of a deal not working out is somewhere between 1 and 150. So not a lot of downside, plus the fact that how often the deals not work out. So I think this is a pretty solid trade over here with SEAC. One other possibility I wanted to mention, they're being sued by shareholders that they didn't get enough, that they want them to renegotiate this 2.3%, that they want to get a higher number. Now, that's possible. I've seen that happen before. It really depends on who the big shareholders are, how much leverage they have. We have to see. It could also potentially derail the deal if the people who are against this 2.3% are getting, maybe Triller comes back and says, no, we're not giving you 3%, the deal's off. So there is some risk here. But anyway, that's SEAC. It was a January effect pick on our list. I'm looking at our spreadsheet right now. It's the best performer so far, up 132% in just 3 weeks. And of course, at the peak, it was up like close to 300% or so. I'll take a water break there. While if anyone has any questions, Jared, go ahead with your reactions.
Well, yeah, my first question is, what exactly are the notes? I mean, you had mentioned
Yep.
that you get your share of the thing plus the notes. Are these like convertible notes? So they're like functionally similar to warrants, or what are they?
That's the one thing I'm not 100% positive about. There's a colleague of mine who's very close to the situation, who I've been trusting on some of his due diligence, and I didn't have a chance. I didn't get into the details with him on exactly what those notes are, but at least from his perspective, he's considering it cash. I would assume it's probably like the value of like a bond, a note, right? Isn't it? It's a bond or something where you're getting interest on that value, and eventually that 75 million needs to be paid to you. Maybe is it going to be convertible into some shares at some point? Maybe, but that's a great question. You're right. It should be looked into. I don't have the answer.
Okay. Yeah, I was just I definitely think that, like, how do I put this? Like, if it's like is a virtual guarantee that it will go to $2, then there's definitely like a ton of ways to make a lot of money with option spreads and something like that. So yeah, I'm definitely gonna try to take a look and see like how much of a guarantee it is that it will reach
It,
that minimum two
if you can
dollars.
figure out the note situation, that will be gold, because you're right that I'd like to look into that, and maybe there people are reading some risk into that. You know, I've
Mm-hmm.
never invested in notes. I don't know how it works. Like I said, maybe you get interest payments at a certain percentage, and then there's a principal that comes in 5 years. Maybe there's something convertible. I don't know. All this is a complicated situation that I don't have experience in, and it could impact the market value of the stock. You're right.
Okay.
Good point. All right, let's look at our other January effect picks. The next one in line that's been crushing it is TF. No, it's Wallbox. So actually, Wallbox, and I made this comment. This was submitted. This is a VIP pick from Ariel Ashirian, which is up how much, man? Let's see. It's up 64% since it was presented October 20th. Man, we've really found a few winners in a tough environment. Out of the last 1, 2, 3, 4, 5, 6, 7, 8, out of the last 9 VIP picks, 6 of them are up, and pretty significantly in a very, very difficult market. I don't know how he did it. And like, it really defying gravity. Wallbox is a SPAC. It's gone up from like $10 to 17 now. But he picked that as a January effect pick, and at the time, like, not really a January pick because it's not being sold off right now in December. But he chose it. Joshua Raban chose it. So Ariel presented it as a VIP pick, but Joshua chose it on December 5th as a January pick. I think he had chosen it because he was expecting like catalysts and more developments in January. So it was like half of the elements of a January effect pick, and so far has been right. I mean, it's up 35% since he chose it. That was the second best performer on our spreadsheet so far. After that is a stock Ashley picked TFFP, which has also been a VIP pick in our community for a long time. It was up 100% at one point, but now it's down 5% since it was presented a year and a half ago. Some ups and downs. We just had a VIP presentation from the presenter, who was Dan Carlson, on TFFP, so can't get into the details on that. That information is going to be saved for our VIP members. Recording is available exclusively for 1 week, but congratulations to everyone who added to their TFFP position. In fact, I did add to it, modestly, not significantly, because I was already down a lot on it. And I kind of created one of the rules I created for myself over the years is don't put good money after bad. Like, even if you're convinced on the thesis, right? It's like I've learned to average up when I'm making money on a stock and get away from the concept of averaging down. And that's actually one of the things that's tremendously helped me. So TFFP, because I'm down so much, I didn't add a lot. I just added like marginally, like 10% at the lows there. So that was a good January effect pick. What else we got on our spreadsheet?
I
Yeah.
just wanted to hop in and say, if you really like TFFP and you are really interested to know what the update from Dan Carlson was right now. One thing you can do to access it is you can sign up for the paid newsletter. If you do that right now, I'm going to be sending out the replay of that later tonight.
Perfect. Yeah, that's good to know. It's a lot cheaper again to get to that newsletter rather than becoming a full member in our community, since the spots are really limited in our WhatsApp group. So you can watch that replay in full. Thank you, Jared. On the January effect list, another big winner. The next one is yours, Jared. Celsius, CELH, up 17.6%. I agree that was a good pick because I believe you saw tax loss selling there in December on Celsius, and fundamentally, it's one of the best, I think, one of the cheaper growth companies.
Yeah, we had a really great conversation with a few guests, including Mark Gomez and Jonah Lepton, and you can watch that video on YouTube. That was a really good conversation. I think that this is a really interesting company. The growth is super, super fast. I think it's like 200% in North America, which is their primary market. And yeah, I think it's just kind of like, obviously it has gone up since I made that recommendation. But yeah, I think that once the market vibe shifts back towards allowing growth companies to go up. I mean, they've been going up a little bit over the past week, but once we get back into a cycle where growth companies are really allowed to fly, I don't see any reason why this thing can't get back to $100.
Nice. Sounds good. Thank you for that commentary. Now, aside from that, we have a number of other ideas on here, which we'll save for our VIP members. Stocks which have not gone up yet, that are either up marginally or down marginally. There's been a couple of big losers as well, which comes along with the territory. So, you always got to be aware of that and make sure your allocations are right, and that you're not overexposed to any one position. But there's a number of other great ideas there. I will talk about DRIO though, since that's my own VIP pick. I did put this in as a January effect pick. And this math looks wrong on here though. Return to date is, I have to look at I don't know why this number's coming out like this. 1 second. Okay, all right, we got the calculation wrong. Okay, that's better. All right, so that's down modestly since I recommended it. But I think this has a ton of catalysts for January. It's a little bit risky because fundamentally it's not really like terribly undervalued. But they're growing super fast. They have tons of relationships that are kicking off in January. Did I repeat? I think I said at the very beginning of this show, right? I did talk about that. So I'm not going to repeat myself, but that's on my list as a January effect play. I'm overweight that as of a couple weeks ago, waiting for some catalysts in January. But there is some risk there because it is potentially fundamentally overvalued if the market is not in a risk-on mood. And they're going to be saying, I'm not going to award you with a multiple on revenue which hasn't happened yet or something like that, And they're not profitable yet. That's a big problem, right? So at some point, they're going to need to raise money. And the CEO of the company, Erez, has been a wizard in being able to raise money on very, very good terms. Almost every time they've done it, they've raised money above market pricing with no warrants, right? But this environment's much more challenging for him. He will need to do at least one more raise that's relatively large sometime this year. So because of that, it's not a slam dunk play, but I like the long-term prospects of this company, and that's my January effect pick. There's a few other January effect picks I have in there. One of them is DLPN, which is up 15%. That one's worked out well. That's an NFT play. It looked like it was oversold because of some of these like January effect picks. They're still getting hammered. Like they had a little bit of a reprieve last week, and then they were continuing to get hammered today, this week, yesterday and today in particular. And some of them have bottomed out, such as TFFP and DLPN. So it's very much a case by case basis, and I think fundamentals have a lot to do with that. But we could see another 2 days of heavy selling in some of these stocks that are not yet fundamentally undervalued.
Yeah, I don't feel super confident that the market is doing what it is supposed to do. Like I hate putting it that way because it's like, yeah, I agree with you that all price action is rational, but it's like if you're hoping that like we're back in a bull market for growth stocks, everything's fine. I'm not necessarily on board with that because the price action that we've seen has been so inconsistent. And the other thing that has concerned me is that on the days when things have been really, really good, there has been lighter than average volume for the market. And that's always kind of a concern to me that this bull market is kind of like the comeback that we've seen is kind of on shaky legs.
Yeah, I agree with you. It is, and as I said on the top of the show, I'm worried about ARKK going down another 23%. So we'll see. I mean, I added a little bit of short to the ARK position because of the technicals there. Yesterday, I covered like half of that today. I'm very day to day on if I'm shorting the market or not right now. These volatile markets very hard to play, but I may add a little bit more in the next couple days. We'll see, but it's a concern. It's really a concern. What's going on with ARKK and all the risk assets.
Mm-hmm.
All right, guys, we are 50 minutes or so into this. So let's say if there's this is your opportunity to ask a question. Hit that mic button and let us know your thoughts, or if you have any questions on any particular stocks, we can do that. If there are no questions, we're going to be wrapping up this show. We'll let you know our schedule in the meantime while you think about whether you want to hit that mic button or not. On Sunday night, we do our weekly review at 8 p.m. here on Spaces, where we talk about the events from our VIP community over the past week. And then at 9 p.m., we have our VIP show. We have a new VIP pick. Steve, I see you. We'll get to you in just a second. So on Sunday night, we have a new VIP pick in the semiconductor space inspired by Air. We're all looking for the next stock that could go on a great run like Air did. So we'll see what that's about on Sunday, 9 p.m. for our VIP members. Steve, go ahead.
Hey, what about Rockley Photonics? Do you think that?
Gosh, we just.
No, did y'all guys already cover that one?
No, not here. We just talked about it on our VIP show. Rockley Photonics has not done great since it was presented as a VIP pick. It's down, significantly, obviously. The issue with this, I and along with a lot of other people in our community, were very enticed by what they were selling, right? They have great partnerships, it looks like, with a lot of high-profile companies. They're building this seems to be disruptive technology, the Apple Watch and a lot of other medical devices using lasers to a non-invasive measurement of different fluids and things in your body. So the issue here is that we ran into a lot of bears since the stock has been going down. I sold off my entire position for a loss a couple months ago. Thank God I did. It keeps going down. I mean, the market cap is 550 million. So the reason this has been underperforming is because there's a lot of skeptics out there in regards to their technology. And when it comes to SPACs, there's definitely a sentiment out there that you can't trust what is put on the sales deck. You have to kind of do your own interpretation and analysis of how likely is it that this product is going to become viable. And what we're learning is there's a lot of skeptics on this technology. There's one person in particular as part of our VIP community that this is his area of expertise. His day job is related to lasers and laser stabilization and things like that. And he has a very negative view on the likelihood of this company ever being able to make this to give you lots of things that it could go up, but I don't think it's going to permanently change direction until the bears and the skeptics are basically proven wrong, right? So that's what's going to happen. Just like air test systems. When did I get in a big way? When the bears were proven wrong. So I've told this story 1,000 times, but just to rehash it for those not familiar, is I was a small shareholder in air test systems for like 3 years, and I knew the story inside and out. And I went out of my way to specifically ask, how come in the past, when you had this big spike in the chart, how come it didn't last, right? And what was that spike about? And the answer I got was, hey, that spike was because they had Apple as a customer, right? Speaking of Apple and Rockley, Apple was a customer of Air Test Systems for some consumer device at some point to do the semiconductor testing. But as it turns out, those Apple orders were for sampling to test the production facilities at Apple to make sure that there were no problems. So it was not recurring orders. So everyone got excited that it was Apple, and then it turned out not to be a recurring order. And then for years, all they had was spotty revenue here and there. So the sentiment was that this company's product will never be used in a recurring revenue sustainable way where every single semiconductor chip needs to be tested, right? It's only going to be used to validate manufacturing processes. And that was the bear take. That's why the stock was so cheap. And then when the bears were proven wrong, that's what permanently changed the stock price. And in 4 months, you get 1,000% return in air. So the press releases started coming out in August on air that said, hey, these big orders for EV, which that's great, for the sentiment for, electric vehicles, these big orders for electric vehicles is not for testing of the, it's not sample testing to validate the production process. This is burning in and testing every single chip that comes off that conveyor belt, has to be tested. Conveyor belt's probably not the right way they do it over there, but the way that's manufactured with their dies, it has to each single one has to be tested. It's recurring revenue, and it's going into every one of these electric vehicles, and that's what proved the bears wrong, and that's what unlocks the value and permanently changes the direction of the stock. So for Rockley, that's what I would be looking for. For Rockley, I would be looking for some sort of press release or catalyst that proves the bears wrong, that says this technology is now proven and it's going to be released on such and such a date, right? So there's no doubt that this technology is going to work. And that's when you'll start, you'll turn Rockley and get a permanent move to the upside. So as far as a trade, I don't know. You can look at the technicals. You can hope there's a bounce for a week or two or something like that. It could work out, but I'm not interested in Rockley right now at 550 million valuation and a bunch of bears out there saying that this technology may never work.
Makes sense.
Yep. Thanks, Steve, for your question. Appreciate that. All right. Unless there are no further questions, we are going to start wrapping this up. Jared, any final thoughts you have at the end of the year here, December 29th? You want to let people know?
No, I think it's been a really great year. I think story trading, the picks overall have done really well. I know you and I have both done really well in terms of a portfolio. It's been a very, very challenging year. And so, yeah, I look forward to continuing to have success and continuing to give advice and, help other people have success.
Sounds great. Yep, everyone, have a happy new year. Hopefully, we're all going to make a ton of money in 2022. I will leave you with this. I don't think making money in stocks in 2022 is going to be as easy as it was in 2021. So just kind of be careful, lower your expectations, stay diversified, do all the sensible, reasonable, normal things. Everyone always gives you the advice that you have to do. This is the year to actually do this, right? Don't think that 2021 and 2020 is going to repeat every year forever. That's not going to happen. So everyone, have a good night. Thanks for joining us, and we'll see you next
Bye-bye.
time. Bye-bye.